Hello and welcome to deKoder.com. If there's one show on the economy and what lies ahead, it is this annual program with investor and writer, the brilliant Ruchir Sharma. The top 10 trends of the year ahead is the most watched and analyzed and discussed of any other analytical show that I know of, and not just on deKoder, but across social media. Ruchir Sharma is a contributing editor of the Financial Times and the author of several books, including his latest, What Went Wrong with Capitalism. He is the founder of Breakout Capital and the chairperson of Rockefeller International. Now, as we look at the 10 major factors that will affect each one of us in 2025, I'd like to make it clear once again right at the start that the research and insights are all done by Ruchir and his brilliant team. Well, thanks very much, Ruchir, for joining us again.
Great to be back, Prannoy.
10th time, 12th time?
It's been over a decade, but of course you and I have been doing shows together for over 25 years. So
25 years when you were 2 years old. You started 1997.
That's right. That's when we started first doing regarding the budget, and then focus more on the Indian economy. And this annual Top Trends show has now been a feature for over a decade.
Wherever I walk, they say, where's that Ruchir show? You know, it really is amazing, actually. Anywhere in India and across the world. So thanks very much. You do the work, I get the credit. That's the way life should be, right?
If you don't say it on air, it'd be better.
Okay, now what we'll do is we'll just have a quick review of what happened last year, what you forecast and what the reality was, and we'll be very strict in assessing whether it was forecast was right or wrong. Then we'll go on to looking ahead at 2025. But we'll go very quickly through last year.
Sure.
Let's look at what the first forecast you made last year. You said incumbent governments will be in trouble. There will be strong anti-incumbency throughout 2024. And in fact, what happened was incumbents won only 1 out of 3 elections. You were right. There was a time just 5 or 6 years ago when 70% of governments were voted back. But last year, only 35%, that's 1/3 of governments were voted back. 2/3 were thrown out, anti-incumbency. What do you make of that? Why?
Yeah, and that's what I said even about the election in the US, which is obviously the most watched election in the world.
Yes.
In terms of the fact that a lot of people are trying to analyze that, is this the rise of the right, like the Trump, what does it signify? And as I said, if you look at the US election too, that of the last 3 presidential elections, the incumbent party has lost. And it's in fact in the first time in US history, at least going back to the 19th century, that this has occurred. That 3 times in a row, whoever the incumbent was has lost the election. And I think that this is a global trend that we saw it in UK, we saw it in other developed countries. The only asterisk I'll put here is that in emerging markets, in developing economies, this anti-incumbency is not such a strong trend, including India, where
Quite right.
You can argue that it was the home of anti-incumbency. This is where the term was sort of coined.
Yes.
But in India, in fact, the anti-incumbency has been a lot less as a factor now. It's become more 50.
Exactly.
Across the world, particularly in the developed world, we are seeing that there's a very strong anti-incumbency, and this is happening because one, economic growth in general has slowed down. You have rising inequality. You have factors such as immigration, which we'll speak about, are playing a role. Yes. But I think there's a general distrust that something has gone wrong with capitalism, that it is not working for the average person, that housing prices are too expensive, education is too expensive for the average person. So I think that there's something that has gone wrong with capitalism. Social mobility power seems much more concentrated with a few companies or a few billionaires. So I think that there's a pervasive feeling in the public that the economic system is not working for them. It's sort of rigged against them. And I think that's what we are seeing at the polls now, that it used to be an advantage to be an incumbent in the developed world.
Yes, absolutely. We saw 70%,
Yeah.
And now 35% this year. And that is a major change.
That's right. And it's much worse in the developed world.
Very important point, because many analysts in India still feel India is an anti-incumbency. But we've had, since 2002, 88 state elections. And guess how many incumbents have won? 44. How
Right.
many have lost? 44.
Exactly.
50-50.
50-50.
And even in the Lok Sabha, 2-2, and then the last one is half-half.
Yeah.
So it's like, and it's no longer anti-incumbency in India. That was this thing of the past. So what the world does today, India did a long time ago, right?
Yeah. Well, let's see if the world moves on back to being pro-incumbent. But I think that in this anti-incumbency in the developed world, US,
Yes,
Europe,
amazing,
Japan,
amazing.
it's a major trend. So if
Major
you're the incumbent, the odds are that you will lose.
Okay, let's move on to the second thing that you forecast, that politicians versus investors. That investors are worried about governments overspending and they're causing a rise in interest rates. And look what happened. You were spot on. Global interest rates rising throughout 2024. They went from 4.6 to 5.1, which is significant.
Yes.
Because
most people expected interest rates to decline. I
Right.
think that you should. It's very important to map this against expectations.
Expectations, exactly.
So, like expectations were that interest rates would come down. That the Fed was going to cut interest rates. Other central banks would cut interest rates. But this is the first time I can remember in history that even though central banks have been cutting short-term interest rates, long-term interest rates have been rising. And that's because I think investors around the world are getting much more concerned by the amount of government spending that's going on, with the fact that inflation has also not been fully brought under control. I think those are factors keeping long-term interest rates high. And that's what I spoke about last year,
Right.
that there's growing tension between what investors want and what politicians want. For politicians, when they're facing anti-incumbency, the easiest thing to do is to go and spend more,
Right.
to have more giveaways, right? Because it's very easy to spend other people's
And that's
money.
what investors were worried about, and that's what you talked about, and that was spot on.
Right.
The other thing you just mentioned, and you had talked about it last year in the forecast for 2024, is that there'll be a backlash against immigration. And in fact, anti-immigrant sentiment, your data shows, has surged. If you look at 2020, about 28% of people said immigration should come down. Most people said immigration is fine. Now, this year, 2024, 55% of people said immigration must be cut down.
Yeah, I think there's a lot of support for the fact that any illegal immigrants should not come in. There was a feeling that any immigrants were good, especially because in the West, their population growth rate is declining. In fact, many Western countries now face negative population growth rates. So you thought that bringing immigrants in was going to be good. But there's a real feeling that this is disturbing the social fabric of a country, and it's taking away from the opportunities. Some of this may be a bit of a myth. So I think there's a very strong anti-immigrant feeling, and this entire agenda of Trump, which is topmost, is how to control the flow of immigrants into America.
And in that 55% that don't want more immigrants, there are many existing immigrants who don't want them. It's what we call in India train compartment philosophy. Once
Right.
you get in,
Yes.
don't let others come in. It gets too crowded. Keep them out.
A very important point, because if you look at the demographics of the election too in the US, the rising support for Trump among Latin American men and all that, a lot of this had to do with exactly this factor.
Compartment.
That's a new term.
Okay, the fourth trend that you mentioned was that there'll be no bust, but a slowdown inevitable in the global GDP. A lot of people were thinking there'll be a crash, but actually in reality there was a global slowdown, as you said, but no crash.
Right.
So again, you were spot on. We went from 3.1 to 2.7% slowdown.
Yeah.
But no crash. It didn't go to -5, minus 0.5 or anything.
Yeah, but only here point I'll make is, in all fairness, is that the mix did surprise me a bit. That the one economy which we'll speak about a lot in this show, that ended up being much more resilient than even I expected, was the US. The US did not experience any slowdown. Now, I think it's a bit artificial. It's because of too much fiscal stimulus and the AI boom, which we'll speak about. But true, in most parts of the global economy, we saw a slowdown. But I'd say that the mix is very important to reflect upon. That America held up much better, and the economy which did slow down a lot was China, in fact. A big slowdown took place in China. There's a lot of sort of distrust still about the numbers they report and how accurate they are, but there can be no denying that the Chinese economy
had
performed
a very bad year.
Much
and
more
it's
poorly.
something you've been saying for a while, and it's been getting worse and worse and worse, and last year was really bad for it.
Yes.
So 4 out of 4 so far. Now this is the fifth one. The fifth one, you said Europe will bounce back. But in fact, the growth in Europe remained pretty weak.
Yes.
Was 1.1% GDP growth in 2023 and 0.8% growth in 2024. It didn't bounce back, but to be again fair to you, a lot of people expected it to be really doing very badly. Europe was in bad 8%, almost as much as last year. So I'll give you 50-50.
Yeah, but still, I'd say that, Europe has been really disappointing, and it's mainly because of the two large economies, which is Germany and France.
Yes.
That those economies have done a lot worse than I expected. Germany in particular. Remember that coming out of the pandemic, Germany was seen under Angela Merkel to be the star in Europe. And now it's gone back to being referred to as the sick person of Europe.
Unbelievable.
So the fact that the largest economy in Europe is doing so poorly is something which has really surprised me. On the other hand, there is some hope here, which is that the economies in Europe which were cast as being these really backward economies, in fact, they were labeled in an almost derogatory way as the pigs, which is Portugal, Italy, Ireland, Greece, Spain.
Yes.
These were economies a decade ago when we first started doing this show, were labeled as the pigs.
Yeah.
Those economies ended up doing quite well, in fact. And this tells you something about how economic cycles work.
Yeah.
That when countries are not doing well, and they're under pressure, that's when they carry out economic reforms. That's when they change for the better. That's what the countries like Greece, Spain, Portugal have done. And when countries are cruising, coasting along, they typically don't do anything. They in fact end up overspending, they get complacent, they get arrogant.
Right.
And
amazing.
That sows the seeds for a downturn.
And that's one of your fundamental points, that things move in cycles.
Yeah.
And you have to figure out the length of each cycle. That's the key part.
Right. But I'd say
that's what this program is about.
Yeah, but I'd say so that way I'd say that the Europe point is a bit nuanced, which is the fact that I've been disappointed by how Europe's done, undoubtedly. But the only thing I'll say there is that it's very instructive to see that there is a split within Europe as well. We like to think of Europe as one giant open-air museum, as people call it, but just because there's nothing else going on there. And for most part, that image is correct because of Germany, France, the two largest economies, doing so poorly. But there is a picture in Europe, of Southern Europe, of these countries
coming back,
which have come back. And in fact, Greece, Portugal, these are really the comeback nations of the last few years.
Now, your sixth forecast was that China will be fading. In fact, China's share of global GDP fell. It fell in 2024 down to now 17%, and the US went up. You can see the graph there going apart. That is spot on forecast again. So we'll give you 5 out of 6. 5 out of 6.
But I'd say that in terms of
5.5 out of 6, sorry.
But I'd say that that's kind of you. But yeah, I think China's troubles are now very well documented, which is that everybody knows what the bear case for China is. We used to speak a lot about what the problems in China are, that they've taken on too much debt. Their demographics are such a problem, which is that the population is actually shrinking now.
Yes.
It's very hard for a country to grow when your population
you're focused on that a lot.
Shrinking. So we focused on debt, demographics, principally. We also focused on some policy mistakes being made by Xi Jinping of becoming much more authoritarian and centralized. But debt and demographics were
the two factors
we spoke about a lot over the last few years, and I think that's now well understood. And the Chinese economy was very weak, that even though officially they keep showing that the economy is growing at 5%, if you really look beneath the hood, if you look at what's happening to domestic consumption and other indicators, this is an economy growing a lot less than what a 5% economy feels like, and it's reflected in the mood around China.
Moving on to your seventh forecast, it's again to do with China. You said stars will emerge outside China. In fact, again, it's spot on because foreign direct investment dropped in China and increased in other emerging markets. Just look at what happened in China. Down over $4 billion, down.
For the first time.
Money flowing out of China for the first time.
Yeah.
And then Mexico up, India up, Indonesia, Vietnam. Actually, for Vietnam, a small little country, up 8 billion. So focus is now moving away from China to other countries, at least so far.
Yeah, so in that way, in some regard, globalization is taking a different shape.
Yeah.
Which is that at one level, American and Western firms want to reduce their exposure to China, but they're not completely shutting their door on globalization and saying we're going to produce everything at home.
Right.
The labor advantages, the wages are so low still in many of these other countries that they're saying, that, okay, we'll move out of China, but we'll increase our exposure to these other countries. So these are in a way, the beneficiaries, you can say, of this fading impulse from China.
Very, very interesting and spot on there. Your 8th forecast was, and you're 7.5 out of 8 so far. You said that, or you're 6.5 out of 7, now we're coming to the 8th. You said the dollar decline will accelerate in 2024. In reality, the dollar was strong against other currencies.
Yes.
But to be fair to you, it was weak against gold and Bitcoin. So I'll give you half for that. The dollar went up 6%, gold went up 28%, and Bitcoin 120%. So the dollar was not the strongest. You could invest in other areas and do better, but it was stronger than the other currencies.
Yeah, so this I would say, was like wrong in a way because of the fact that I expected the dollar to depreciate because the dollar is very overvalued. You can feel it. You go to America today, and that's where I live and spend most of my time. It is really expensive, the most expensive hotel rates in the world in terms of, even if you were to buy basic stuff in America, it's become very expensive. Housing, food items, it's very expensive. So the dollar seems very uncompetitive, and I expected the dollar to decline. But there's still such a rush of foreign investment going into the US, and this feeling which we'll speak about, that the only place in the world worth investing in is America, that it keeps pushing the dollar higher.
What do you guys call it? American exceptionalism.
American
exceptionalism. That is an exceptional place in the world.
Yeah, this is a term which has been taken out of a geopolitical playbook that used to be used for the idea that America is an exceptional country, that it's like, in a way, it's ideologically, morally superior, its economic and political model is superior. That's what the term American exceptionalism used to be applied for.
Right.
I think around the world, that sort of sheen is gone. But when it comes to economics and markets, America is still seen as this shining city on the hill. It's still seen that way. And so therefore, it's attracting huge amounts of investment. People keep asking me, okay, if we don't invest in the dollar, where should we invest? And my answer back then, even a year ago, was that, okay, if you don't want to invest in other currencies, there are alternatives such as gold. There is alternatives such as Bitcoin, where you can invest in, and those things did very well. In fact, gold is a very interesting point, which is that if you look at central banks around the world now, they're not holding their foreign exchange reserves as much in dollars. It's still the leading currency. That share has come down, but they're putting more now into gold in terms of where they're holding foreign exchange reserves. Bitcoin is still 1 or 2 steps too far for central banks to put their foreign exchange reserves in. Right. But those two have come up as sort of alternatives to just investing in the dollar. That has happened, but the dollar itself has been unusually strong and something which clearly surprised me.
Strong against other currencies, but weak against the gold. So you may say you got it wrong, but your modesty is the facade with which mediocrity impersonates genuine excellence. So you get half a part. Let's go on to your 9th point. AI stocks. AI is the buzzword of the last, 24 months. But you said AI stocks will get a reality check. In fact, AI stock boomed.
Right.
Look at NVIDIA. It went up 164%.
Yeah.
And all US tech stocks, a lot of it is AI in that, above 36%.
Those are fantastic returns.
Fantastic.
And that's something which obviously sort of I can look back and say of sort of having totally underestimated the AI wave, which is that there's such an, like a race, a gold rush almost, that we need to invest in AI, that's something which has done far better than I expected it to. In fact, a lot of the investment landscape last year was dictated by which countries are doing like AI, and America was the leader in that. And then even in emerging markets, countries such as Taiwan, those were the big beneficiaries of the AI wave. Huge. TSMC is like such a great chips manufacturer. So AI did a lot better than I expected as per that forecast.
Okay, let's move on to your 10th forecast, which is always the and finally type of forecast, that there'll be more cricket and less Bollywood. Bollywood has kind of lost the plot. And look at that. Bollywood box office, including South Indian films in Hindi, are down from 690 million to 520. That's quite a drop. While the value of IPL has gone up. So cricket is just still doing well, except in the recent Australia Test series. But that was not our fault. That was biased umpiring.
No, but I'd say that for me, like what's really troubling here, having grown up as a great fan of movies and films, is how poorly Bollywood is doing. And they just can't seem to figure out what's the way out? What's the new plot that they
Yes.
need to do? Because even if you look back, and we keep having these discussions around dinner tables, that can you name our favorite movies of the year?
Right.
And we struggle now to come up with any Bollywood content to say that, hey, this was like really good. There was a time when we'd be able to talk about that this movie was great or that was great. So there's something really gone wrong. The content seems bad and the people are giving the thumbs down. So you have 2 or 3 movies which did really well, giant box office successes. But for most part, most movies did very poorly and are not able to recover their costs anymore.
Okay, quick summary. If you look through them, one, biggest year for democracy. Just focus on 1 or 2 of the 10.
No, I'd say that if you look at the 10, so clearly I'd say that it ended up being a very strong year for anti-incumbency. That I think was very clear.
Right.
But the trends which I did not get right included AI, in terms of how that AI did a lot better than I
would say that's the only one that was out, but the
Right.
others were 50-50. The blues here are the ones you got right. 50-50 time for euro to bounce back. It didn't fall, but it didn't bounce really. And the dollar decline accelerated against other currencies, but not against gold. So you get overall 80%.
Unique homes, uniquely placed, uniquely yours. Service tailored to your lifestyle. A global network like no other. Exceptional heritage. Pioneering expertise. Every home is one of a kind. Like you, like us. Discover your one of one.
Now let's move on to 2025 and your trends of what's going to happen in 2025 and how it's going to affect each one of us. And really some really astounding ones. In fact, you start with the biggest trend that you see is going to happen. It's going to perform the rest of the world. I mean, recently it's overperformed the rest of the world by 6.6%
per year.
per
For the last
year,
15 years.
averaging for 15 years.
Yes.
Came out of a minus 3.3, but before that 10.1%. And you're saying it's going to go back to underperforming. That's a key forecast. And you can explain the reasons for it. The Trump win has boosted American exceptionalism, for example.
For 15 years. That's highly unusual, because if you look at the historical pattern, typically when the American stock market does so well in one decade, then in the subsequent decade it at least gives back some of the gains. But that's not happened so far.
Right.
We are halfway through this decade. The American stock market has been way outperforming the rest of the world. And there's one statistic out here which tells you as to what the magnitude of this outperformance has been. The American economy today, as we saw in your previous graphs, is just under 30% of the global economy, America's share in the global economy. Yes. But if you look at the American stock market today, its share in the global indices, like the MSCI Global Index, is now approaching 70%.
30% economy, 70% of the global stock market.
Yeah,
That's
global stock market index,
difference,
like we have, America is getting there. That is an incredible amount of difference. It's almost suggesting there's no other country in the world worth investing in, that America is the only country worth investing in.
Amazing.
And this has been boosted a lot with the fact that the dollar has been so strong. It's boosted a lot by the fact that you've had these tech companies in America earning extraordinary profits. And because those tech companies have earned so many such profits, people keep flooding into them. And then Trump's victory has given a further boost to this, because there's a feeling that Trump, if he imposes tariffs, it's going to be good for America, bad for the rest of the world.
Right.
If Trump, his policies, whether it's deregulation or tax cuts, it's going to help America at the expense of the rest of the world. But I think that this has become such groupthink. And I'm just very wary when something becomes such groupthink that everybody feels exactly the same way. Everybody wakes up in the morning, expects the same trend to play itself out. I get very wary of that. And in my 30 odd years of watching markets and in investing, I've never seen such strong groupthink, which is that everyone expects America to be the only place to invest and for America to keep outperforming. And I think that this trend could reverse itself for some of the reasons that we'll discuss on the show,
Right.
including what is America's fatal flaw, which is its fiscal deficit, and also this idea that I still believe in this economic concept of creative destruction.
You said you've been watching these things for 30 years. I want to make clear that he used to write for the newspapers in India when he was 16 years old, still in school. Or were you in college by then? Okay, let's move on to exactly the reasons why.
Yeah.
What extended the American dominance? One, you say Trump's win has boosted American exceptionalism, and there's also this AI mania we talked about. You said there's massive post-pandemic stimulus in the US, much more than other nations, post-pandemic stimulus, and also that investors are mesmerized by the TINA factor. There's no other alternative. Something you just touched on just now. Just expand on these.
Yeah, because I think, there is a feeling amongst investors that Europe is in such bad shape, as we discussed the large economies. Japan is still, facing such a big demographic challenge. Emerging markets in general are too small or too insignificant to invest in. China has not been doing well. So this feeling that there is no alternative, that there's so much money sloshing around the world, and if there's any place we want to put this capital in, it's only America. So this TINA factor, again, we have these political terms which are now finding their way into the investment and economic lexicon. We spoke about anti-incumbency. We spoke about like American exceptionalism, and now the TINA factor. So all these are sort of further boosting investments in America.
Okay, the next part of the same point is really quite fascinating because there's 2 points in it. If you look at the top 10 firms in the world, there's been massive churn from decades. You have pointed out that before, but it's much more significant now because now there's been no churn in the first 5 years of this, the 20s.
Decade, yes.
But there are two things about the churn. One, there was been a global churn and many of non-American companies were coming in and going out. But now it is again dominated by American companies and there's no churn. Now you're saying there's going to be a churn and American companies will not dominate as much.
Yeah, I'd say that this domination seems to have reached a peak.
Right.
So they will remain. These companies have now become household names. And so they're, in a way, are basic essentials, whether it's Apple, Amazon, or even Google, Facebook kind of things. But I think that what's very important here, Prannoy, is the fact that this trend is worth reflecting on. It's a basic law of capitalism. It's something which we economists call the laws of creative destruction, which is that new companies are supposed to come and take the place of old companies. Otherwise, the same old companies will keep dominating, which is not the way the markets are supposed to function or capitalism is supposed to function. And that's the trend. In fact, this chart that we have going right back the last 50 years, you can see every decade, the top 10 companies, there's massive amount of churn which has taken place. But in the last 5 years, the same companies that ended the decade dominating are still at the top. In fact, their dominance has only increased in the last couple of years, which is what I find very unusual.
Yes.
But I feel that, and for reasons we'll discuss in your show as well, that they're sowing the seeds of their own demise by spending so much on AI, and the returns may not be commensurate. So this is all part of the same point, really, essentially packed into the first point, which is that American dominance has been fueled by their big tech companies, has been fueled by massive amounts of fiscal stimulus that America has put in. And we have this group think today that there is no alternative. The only place worth investing in is in America. I see that trend shifting this year. And the second point that we speak about now sort of points to it.
Exactly what you had mentioned earlier, the kind of America's fatal flaw.
Yeah.
That fiscal deficit is in a league of its own in America. Look at fiscal deficit as a percentage of GDP for this decade. America's 8%.
On average, yes.
That is way above anywhere else. It's like twice as high as Europe, higher than India, and almost twice as high as other emerging markets. That is a fatal flaw. 8%.
Yeah, that's been the average this decade. The latest print is closer to about 6% or so. Even that is 4 or 5 times higher than the average of other developed countries. So this is really like in a league of its own.
Right.
And this is not how America used to be, because a lot of people tell me that, like America's always run deficits, what's the big deal? I said, yes, in the past, America ran deficits which were more in line with what the other countries were running. Now, in the last 3 to 4 years, America seems to have just blown past all past historical records. So it's running this massive fiscal deficit, and it's being able to get away because it has the world's reserve currency. It's able to print as many dollars as it takes. And because of the AI mania, people are willing to fund these deficits, saying that they have no other place to go.
It'll all come back. But
it'll all come back. But if
could
something can't go on forever, it won't.
Almost like a warning that you gave of China. Fiscal deficits, debt going up. Similar thing happening in America now.
Yeah.
And if you look at your second aspect of this same point, the US debt is highly inefficient. America uses more and more public debt to achieve just $1 of GDP growth. It used to be 0.70 cents to get $1 growth. Now it's $1.8 to get $1. And that's much more than any other country. But compared to its past, as you were just saying, America was not always like this.
Yes, because now it's taking, just reflect on this, it's taking nearly $2
to
of
get
debt
$1 of growth
to generate $1
Right.
of economic growth in America. And this is not how it used to be. Even 5-10 years ago, it took less than $1 of additional government debt for America to generate $1 of GDP growth. Now it's taking nearly $2. And there's no other country.
Huge change.
And there's no other country, as you can see in the world,
Right.
with a debt inefficiency on the public debt side like what America has. So I'd say that this is truly concerning.
This is phenomenal data, actually, and a phenomenal insight and worrying.
Yeah, so I'd say that, and this is also one reason why the American economy has done so much better, because it's, in terms of at the surface, it's doing better because the amount of debt it's taken up. But also what this tells you is that what exactly is public debt? It's the government which is spending a lot. And another way of looking at that is that just look at the number of jobs now being created by the government in America.
You have a lovely
this is supposed to be a capitalist economy.
Yes.
And now nearly 20% of all jobs being created in America are being created by the government.
And it used to be 1% according to your data.
Yeah.
And now it's 22% of jobs created by the government.
Yeah.
In the most free market private enterprise country, government doing 22%. It used to be 1%. Just in 2010.
It just shows
what
you
a
the
change.
Role of government, how it's increased there. Even if you look at welfare payments, if you look at the number of counties in America where people are earning a significant part of their income based on welfare payments in America now, that's more than 50% of the counties in America are now reliant much more on transfer payments from the government. That number used to be not even 25% a decade or two ago.
So but now is Trump and Musk and Vivek Ramaswamy going to change all this and cut down government jobs?
Well,
creation of jobs?
2 points here. One, that first, we don't know as to how much they'll succeed. Because remember that a lot of these government spending is on very sensitive areas like Medicare and Social Security benefits and stuff, very hard to touch. Second point, probably more importantly, is that even if they succeed, at least in the short term, it will mean that American growth could take a hit because it's being artificially boosted today by so much government spending.
If they do this, that will hit your growth.
That will hit growth. And will they have the appetite then to stomach that? And for how long will they be able to stomach that? So I think this is the reason why we come to a third point, which is that no matter which way you cut it, I think America will look less exceptional going into 2025.
Right. Just let's bring India a little into this. If we look at what's happening in India, there's an interesting graph to show how India capital expenditure, infrastructure has gone up and subsidies have gone down. That's a key aspect of growth, actually.
Yeah. So I'd say that just like the point I made that in America, the government's role has become much greater and possibly less efficient. In India's case, there's something to be said that even though India's always run a very large fiscal deficit, at least it's stabilized. The fiscal deficit hasn't increased much in the last decade or so, particularly at the center. And the mix has changed. That, like in America, they're spending on everything from trying to build new infrastructure to welfare and stuff.
Everything, yeah.
Yeah, exactly. It's like free for all. In India's case, the government has changed the mix a lot in the last decade. They're spending much more now on capital expenditure and less on subsidies. Although, again, nothing, like in India, as they say, everything you say about India, the exact opposite is also true. As you know, with the spate of the recent state elections, you're seeing that even the state governments in India are spending a lot more now on welfare again and stuff. But broadly, I'd say that if you look at the picture over the last decade, the fiscal situation seems relatively calm and better managed, with more spending now towards productive stuff, which is on infrastructure and less on subsidies and welfare.
I'm glad you say welfare and not bravery and waste of money, because the only time when people think about the poor and actually distribute money to them, and they remember that till the next election at least.
Right.
Now moving on to your fourth point, and you're saying like China's fading and new stars emerging. The new stars emerging here as well compared to America. The share of key emerging markets is growing faster than the USA. Just look at that graph. It had dropped in the last 15 years and now it's back up again, and it's scheduled to go even higher. So more and more emerging markets are going to grow faster than America.
Yeah, I think, here also, as you know, that a decade ago, I wrote my first book, Breakout Nations.
Yes.
The basic thesis of that book at that point in time, in 2012, was that there was so much hype about BRICS and emerging markets. And at that point in time, I tried to caution that expectations were very high, this hype was a lot, and these emerging markets may disappoint, and the true breakout nation may end up being America. I wish I'd invested accordingly. But
you did.
But unfortunately, I'm still biased towards emerging markets. But this is very important, because remember that people invest in emerging markets because of better growth opportunities.
Right.
But in the last decade, many of these emerging markets, economic growth disappointed. In places like Latin America, Africa, even like India, compared to what was expected, India's economic growth didn't come out to be as strong.
It's kind of plateaued.
Yeah, it's plateauing now at around 6% But I think people forget that in 10, 12 years ago, everyone thought that India's birthright was to grow at 8%.
I will make that same point again, which I've made before. If we want to be a real economy that's advancing, you've got to be like China, who grows at 12% for a decade. 12. Unless we grow at 12, we should not be happy. But anyway, not even growing at 8, we're going at 6.
6, but I think
but we say it's faster than the others.
That's right.
But it's not good enough.
Yeah, that's one point. But this important point I'm making here is that many emerging markets saw their growth rates disappoint over the last decade or so.
Yes.
Across the board, right? Not just India, but many other emerging markets saw their growth disappoint. I think that in the next few years, and these are the projections being also given by the IMF, economic growth in some of these countries may outperform on the upside.
Right.
And that's because they have cleaned up a lot of the excesses that they had built when they had the boom years of the 2000s. Plus, they're investing a lot more in infrastructure and other productive investment. And the other point is that they're not as reliant on fiscal stimulus as America is to grow. So as America sort of weans off some of this fiscal excess and stimulus, I'd say that these emerging markets could shine more in the next few years.
And go back to your earlier graph where so much growth in foreign direct investment.
Yeah.
China, a lot of its growth, that's 12%, happened with $80 billion of foreign direct investment in those days.
Right.
But we are seeing that happening now because of China fading a bit. So
yeah,
you're going to see other emerging markets growing faster.
Yeah, in terms of, I expect some positive there, and also that once the US exceptionalism fades a bit, I'd say that the attention could come back more into some of these other emerging markets. And one key aspect here has to be that the dollar also at some point in time has to start weakening, because as long as the dollar remains so strong, it's very hard for emerging markets to attract too much capital. But when and if the dollar weakens, then I think emerging markets could attract some capital, which will help their growth rate. And as far as India is concerned,
let's look at that. Focusing on that, I did say that we need 12%, but on the other side, all your data shows we are growing faster than other emerging markets.
Yes, that's because that base is lower. So in terms of that, our per capita income at $3,000 is much lower than other emerging markets on average, which is closer to about $8,000 to $10,000, the average income of those countries.
But India's growth lead will continue, you say?
Yeah, I think so. There's a very old formula like I've had for India, and I've really used this for the last 30 years, that whatever the emerging market average, we typically tend to grow about 1.5 to 2 points faster than that.
Okay.
That's been the standard formula, and we focus so much on domestic factors. In fact, and I said this in the opposite vein also 10, 12 years ago, when we were so proud of how India was growing at 8% and stuff. And I was saying, listen, all emerging markets are growing at 6%. So, the fact that we're growing at 8% is the fact that we've been lifted by this global tailwind. So it's a very simple formula that whatever the average is across emerging markets, India tends to grow about a couple of percentage points faster than that. I expect that growth lead to remain intact in 2025.
At least we've come out of what Raj Krishna, the famous economist, the most dynamic man, my PhD supervisor, used to call the Hindu rate of growth.
Right.
Remember? 3%, 3.5%.
Yeah, that was like such a terrible sort of term to use.
But it's actually more like a socialist rate
Socialistic rate
of growth.
Exactly.
Which was, public sector, nationalizing everything.
That's
so we're
right.
coming
out of that, at least from 3.5, we come up to 6. 6 is not great, but better than the emerging markets. And your formula, 2% higher than the
emerging market average. This is a standard
Very
formula
interesting.
that's worked, I think, for the last 30, if not 40 years.
Now, I've got a shock by this next forecast. So your fifth forecast. China, Ruchir Sharma is saying China is investable again. The reason you say it is really fascinating because China is now cheap and attractive for investment. Look at the price-earning ratios. That's the cost of stocks and shares. In China, it is 10 compared to India and the US, which are 23 and 22. I mean, they're half as expensive. We are twice as expensive as them.
So let's make a couple of points here. One, I remain structurally bearish on the Chinese economy, right? So which is the fact that because of the debt and demographic factor that we spoke about, those haven't been resolved. So I still expect those to be a headwind as far as China's growth rate is concerned. Now, what I'm saying here is this, that again, I'm always concerned when views become too one-sided. Just like 5 years ago, when we would tell that, listen, these are the risks in China, and people would say, no, China is a different economy. It can overcome any challenge it is. Today, I am sort of concerned by the fact that everybody has become very bearish on China. Everyone is telling you the same theories that we would tell them. Now they come back and tell us, which is that the debt is terrible in China, the demographics is terrible. And all I'm trying to say is that it's still the world's second largest economy. It's still the world's second largest stock market. If you look at China, Hong Kong combined, it's still very large. And there are some companies there you can find, what we call diamonds in the rough. Now, I'm not a big believer in just buying cheap for the sake of buying cheap. Because often thing is cheap because it's
not doing well.
It's not doing well. The profits
there are reasons,
and the growth outlook is poor, so therefore it's doing. But I'm saying that if you objectively look at China today and you look at some of the companies in China, they are doing relatively okay. They have some cutting-edge technology.
There's one company that you pointed out, which is just an eye-opener for me, and that's BYD. That's basically you're saying China is investable, and some Chinese companies are very undervalued. BYD is electrical vehicle company, just like Tesla. Yes. China's Tesla, and look at what you pointed out. The number of cars they've sold is 4 million compared to Tesla's 1.8 million. Their market value is 100 billion and Tesla's 1.2 trillion. That's 12 times higher, and they're not even selling the same number of cars. And look at the price earnings ratio. 15 for BYD and 120 for Tesla. This really makes it, makes it very investable.
Yeah, so I'm saying that this is just an example that I'm citing for you here, that there are cheap companies in China with good quality products. I think people who use BYD cars are generally happy with the technology that is there in those cars. So this is my basic point as far as it's concerned.
The quality has also gone up.
That the quality has gone up and you have good technology being used there, and you look at these stock prices which have been pummeled. Many of these stock prices in China, not in terms of, especially in the tech space, some of those stocks are down 70-80% in dollar terms. So that's my point, that there are diamonds to be found in the rough in China, even if you're structurally bearish on the economy as I am.
Just explain to an average viewer price earnings ratio. What exactly is meant by that?
Yeah, so this is a valuation tool that a lot of investors use, that, today what is the price that you're paying for a certain stock compared to how much it is earning per share. So this is a very basic sort of valuation measure that people use. So therefore, I think that the feeling here, just looking at these data, is that the valuation is very low of Chinese stocks. If you look at
if your earnings were 1 million,
right,
you pay 15 times that.
Yeah,
that's a price earnings ratio. But in Tesla, you'd pay, if it was 1 million, you'd pay 120 million. It's your how much you're paying for a certain profit.
Yeah, that's right, exactly. So I'd say that in terms of that's what the valuation is, and I think that this is quite telling. So this is just an illustrative example in terms of how this gap is opened up.
But it's important to emphasize the distinction you make. You're not overwhelmed by Chinese economy.
Right.
But there are certain companies, and the stock market is a different animal altogether compared to the economy.
Yeah, but I'd say it is still important for the economy to at least stabilize.
Yeah,
because if,
that's what you said,
if by any chance the economy keeps on tanking, and let's say that China has a financial crisis for some reason, there's no way that this theory of mine is going to play itself out. But I'd say that assuming that the Chinese economy stabilizes even at a low level of growth, I think there are some investment opportunities in China just because things are going so beaten down.
Things are changing in China, and people have a bit of a lag effect. They're carrying on from the past, and they're telling you what you've been telling them 10 years ago. Okay. Now moving on, let's get on to India, your sixth forecast. In India, small will no longer be beautiful, and that's very, very interesting. What are the annual returns? You've got this amazing data that large cap companies, the annual returns were 8.7%, but mid cap and small cap in particular, in mid cap 9.7%, but small cap annual returns 13.1%. But if you look at America, exactly the opposite. Large cap 13%, 13 plus, and small cap 8.7. It's like mirror image. And you're saying small will no longer be beautiful in India. It won't be 13.1% in India in the future.
Well, I think the point that we're making here is this, which is that the returns of small to mid cap in India in that space have been extraordinarily high. And in fact, a lot of speculative mania is also happening in those stocks, Prannoy. If you look at the retail speculation that's taking place in those stocks and all that, a lot more is happening out there. And so my cautionary tale is this, which is that some of this is bound to cool down. And so it is very unusual for small cap stocks and mid cap stocks in general to do so much better than large cap stocks. So I'd say that like in India, this gap is likely to narrow, and it's possible in America the opposite happens.
The gap will narrow there as well because large cap will go a little bit down. In India, small caps are now more expensive than large caps. The price earning ratio for large cap is 20, while small cap is 27, small and medium.
Yes.
In America, again, exactly the opposite. Small caps are now cheaper than large caps.
Yes.
And that large caps are 22.7 and small caps are 19.1. So exactly the opposite again. Small caps expensive in India, large caps expensive
in America on a relative basis. Yeah. So I expect some of this gap to narrow.
Yeah.
And you can see that
very interesting.
There are other sociological signs of excess, that when there's too much speculation happening in a particular sector or particular cohort of stocks, that's when I get much more circumspect about it. Yes. And so therefore, I think that like in India's case, we could expect some of the larger cap stocks to do relatively better in the coming year compared to the small cap stocks.
Fascinating. Back to AI. You're saying there's overspending on AI by, and that'll hurt big tech firms. Big tech firms are investing heavily, perhaps maniacally, to win the AI race. I mean, they used to spend an average of 10% a year for many years.
Right.
Now they're spending an average of 27% investment in AI, 27% per year.
Yeah, that's the growth rate, which is taking place in these. So there's a massive amount of spend which is going on. Now, of course, the people who manufacture the AI chips, such as NVIDIA, you can understand that they're benefiting a lot from this. But some of these companies, they're called the hyperscalers in America, which are which are investing, the Microsofts and the Alphabets and Facebook, etc., like even Tesla. The amount they're investing in this is quite incredible. And here's the point that I'm making, that these big tech firms in America have been making extraordinarily high profits, what we call supernormal profits. Now, my point is that if they're going to spend so much on AI, some of those profits are going to come down. And I think that investors and other people are going to question that, okay, you're spending so much on AI that, in terms of what are the returns? Who's going to benefit from this? How much money are you going to make of this? And this is one of the very important points that I'll make. If you look at past such revolutions, whether it was the internet revolution that took place in the 2000s or the shale oil revolution that took place, the established firms were never the big winners of it. In fact, the established firms ended up spending a lot, but they were not the big winners of it. The consumer was, or some new firms came and benefited from it. Just like even now, NVIDIA is the biggest beneficiary.
But also, Satya Nadella and Microsoft invested in Sam Altman and AI. He really saw ahead, and he owns, I think, 49%.
Right.
So that may develop, but that will help Microsoft. But
Yeah,
that's an unusual case.
That's an unusual case, but in general, my point is that they're
But
spending
brilliant
a lot.
of Satya Nadella.
In terms of how much they're spending, of course, full credit to them for having foreseen this, unlike me. But I'd say that the other point is that will the returns on AI be
anything,
like anything which are commensurate? Because even now, if you look at the adoption, it's sort of slowing down a bit. In fact, I mean, there was a huge surge, when the first app really became widely used, like ChatGPT and stuff. But if you look at it, if you look at the Google searches, if you look at what's happening now in terms of the adoption of AI and the number of companies which are saying that, we want to adopt AI, that I think is slowing down. So I think
they're realizing that,
so it's this combination, but the companies are spending a lot. I'd say that for me, the more important point is this, that Sundar Pichai made a statement which will stay with me. He said so last summer, which is that the risk with AI now is not that we spend too much, but that we spend too little.
My God, that is a worry.
So that, that level of stuff, because, when people say that, again, it's something which at least as investors, we should be concerned about when spending gets that indiscriminate.
And then you have got a little bit more data on how overspending may hurt big firms. AI mania may be outrunning demand. That's the point you were making.
Yeah.
In fact, if you look at the reality, share of workers who use AI daily is just 4%. The share of firms that adopted AI is just 7%. I mean, these are really shockingly low. I didn't expect them to be this low. And share of buyers who want a new phone for AI, 82% don't want it for that. Only 18% want it for that.
So it'll take a while. I think that AI is the future. It's here to stay. I'm not debating that. I think it's this entire triangulation, which is that you have a lot of hype being created by these hyperscalers who are spending so much on AI. And then you have expectations which are very high. And yet, in terms of what the product is being able to deliver, that's still taking a lot of time to materialize. So therefore, I think that this could be something which could hurt the profitability of these big tech firms that are spending so much on AI.
Another amazing factor moving away from AI to America and your whole general theme of underperforming and its exceptionalism maybe ending. You're saying in your 8 out of 10 forecasts that trade will grow without America now. 8 out of the 10 hottest trade corridors currently do not include America, don't include USA. You can see the top 10 trade corridors there. Only 2 of them include America. And the rest, people are trading without involving America at all.
Yeah, this is a very important development that's taking place, which is that we are still so focused on seeing the world and the global economy revolve around America.
Yeah.
But I think there are signs here that already, and with Trump coming in, I think this trend is likely to accelerate. In fact, we just saw that the European Union signed a deal with a bunch of Latin American countries to bring tariffs down by 90%. So those sort of regional trade agreements are accelerating. Also, bilateral trade agreements are accelerating. And here what we see is that if you look at the trade corridors around the world, the maximum growth is taking place between countries which don't involve America. In fact, 8 out of these 10 don't involve America.
And it never used to be like that.
Yeah, so so the world sort of is moving on, and that's the advice. When someone asks me that, like, how should the world adopt to a Trump world, and my point is the fact that start thinking about how to do things outside of America. And
which they are. Apparently, people are taking that into account, including India.
Including India.
If you look at India, also is signing more regional trade agreements than before.
Yes. That's like really accelerated. Because in terms of that, if you look at India, there was a big hiatus. That last decade, India barely signed any new trade agreements, but last 3 to 4 years, that pace has accelerated.
And these are trade agreements without America.
Without America. Yeah. It's like bilateral agreements. It used to mainly be with Asian countries, but now it's happened much more with the Gulf countries. And even with the developed countries, with countries like UK, Oman, trade agreements are being currently negotiated. So you're seeing that India also is getting more active in signing more bilateral trade agreements with countries, and that too outside of Asia. The only point I'll make about India here again is that I wish we'd do more to trade with our neighbors. That's something which remains one of India's weaknesses. That if you look at the big success stories, around the world, including China, they had very good trading relationships with their immediate neighbors.
Costs of transport are so much less. It's much easier.
Yeah, like regional hubs are much easier to create.
I mean, you've got the European
and the synergies
Union.
are like much easier to create. And in that regard, I think India has been, its relations with its neighbors haven't been great. And so therefore trade hasn't really taken off. But in general, otherwise, the larger point here being that India too is getting more active in signing more bilateral trade agreements.
Excluding America.
Which don't involve America because it's bilateral with other countries.
Yeah. 9th out of 10. You're saying that this is really very interesting again. Private funding is going to slow down globally. Private funding has accelerated sharply in the last 5 years. If you look at between 2000 and 2019, it grew from 1 trillion to 7. And from 2019 to 24, in the last 5 years, gone 7 to 14. Private funding, first explain exactly what you mean by that and why this is happening.
Yes, we were sort of conditioned to think about all funding mainly happening through public markets, which is if you raise equity funds, it's through IPOs. If you're doing new lending, it mainly happens through banks. That's typically how we were conditioned thinking. But in the last 10, 15 years, particularly after the global financial crisis, you've seen this big explosion take place in the private markets. One's private equity, which is sort of, direct, where people sort of take a stake in companies which are not listed on the stock market. Or the second is even when lending happens, the lending takes place outside of the traditional banking system. It happens on a private basis outside of the banking system. So I think that we've seen this huge explosion take place in private credit growth.
Your next graph highlights what you're saying, an amazing graph. It says private equity from being well below public funding has now overtaken public funding. Just look at that. Public capital is minus 5% growth, private equity plus 10%. And private equity from being way behind public is now ahead of public. I mean, this graph is...
Yeah, so it tells you about the big trend that's been happening. And I'm trying to say that here that it's a strength taken too far becomes a weakness, which is that this may have gotten a bit too far. And now you're seeing a lot of retail people wanting to participate in this. So, because at the end of the day, if you throw too much money at something indiscriminately, there are negative consequences.
So you're now saying that public funding will increase like IPOs, etc. I guess much of the private funding, they want to cash in because they say we'll private fund for 5 years, then we want our value. So they will go for IPOs, etc. as well, I guess.
Yes, so some of it is that, but some of it is just sort of some like a slowdown after this breakneck speed that we have seen as people realize, okay, what are the returns we can get? What is the opportunity set out there which we can chase? Now, as far as India is concerned, this is still at a very nascent stage.
Let's have a look at India. You've got the data for that.
Yeah.
In India, private funding is growing fast, but still at an early stage, as you just mentioned. It's only 120 billion right now.
Very small. As we said, the global number runs in trillions of dollars. We are still not even running in hundreds of billions of dollars.
But it's still doubled in the last 6 years.
Yeah, but I'd say like in India, this is still at a very nascent stage.
Early stage, yeah.
But I'd say that globally, I think that especially the US, because really where all these trends have been on steroids has been in the US. Whether it's private lending, private equity, whether it's got to do with public markets in terms of their domination, it's very US centric. But I'd say that as far as India is concerned, this is still at a nascent stage. So I'm not that concerned about what's happening in India as yet. But globally, I do expect the growth in private credit, in private lending, and in private equity to slow down, particularly in the US.
Okay, now moving on to your last and final, which is always a bit of a tweak in your 10 forecasts. And this is about obesity and that there is no magic solution. Now, I feel I'll come to it. I think you're a little biased because you're bloody fit and you think all this Ozempic and all, you don't need it, so nobody needs it.
I've not said that. Still, yeah.
Anyway, you said no, America is exceptional and in a very different way. Because of its level of obesity. It is sad that an American level of obesity is 44%.
About the highest in the world for any major country.
Almost twice as high as Europe.
And nearly 3 times the global average. The global average is closer to about 15%.
Wow.
Europe's at, just under 30. America's at 44%, the highest obesity rates for adults around the world of any major country. So I'd say that that's why in America there's also this big craze for finding a magic solution to this. So these injections you take for weight loss drugs, have been booming in America. And I sort of think that some of these weight loss drugs, etc., for some people, this is beneficial. But the whole idea that you can just sit there and pop Ozempic and keep popping ice cream as well.
And watch television,
and
don't
watch
go for a run.
And don't do any...
But look at the amount of the massive increase in sales of obesity drugs. That's GLP-1, Ozempic and various others. Look at that. From 3 billion 4 years ago to 24 billion now. That's an 8-fold
on out there. And my point is twofold. One, that there is no magic solution to this. Can't be so simple. And how long can you sustain this? And what side effects will you have? Because when you take all these drugs, there are bound to be some side effects because this is still all very early days.
So you also say there are side effects. In fact, you've got this interesting graph of the side effects. The searches, people who have side effects of various types are searching on Google what to do about it. And they've gone up by 300%.
Right.
So it's an indication there's both people with side effects looking and people worried about side effects.
That's right. So I'd say that that's my sort of point here, which is that these drugs, for curing diabetes and other stuff, they're very beneficial, like in terms of that. But in terms of to expect that we have found the magic drug that you can sort of suspend everything else and just have something to suppress your weight gain, I'm very suspicious of that.
Now, the other point that you make is that after you give up Ozempic injections, which I think you have it for the rest of your life.
Yes.
Which is a terrible commitment.
Yes.
Once you give it up, does the weight stay down, make it back up again? Or do you lose all the gains? What happens?
Yeah, so that's what the studies show, that when you have it, over a year or so, you can expect your weight to come down, possibly on average of around 18% or so if your weight comes down. But the moment you give it up, then your weight starts to go back up, and your net weight loss is closer to 5-6%.
Not 18-20%.
Yeah, exactly. So I'm saying that...
And some people put on more than they...
Yeah, that's right. So I think that's one. And two, there are the side effects consequences. So I'd say you have to keep all this in mind before celebrating these drugs as a magic solution.
So what you're saying, everybody has to be like you, run every day like a madman. What are the side effects of that?
I'd like to know.
Crazy. Okay, let's do a very quick summary because we come to the end of the top 10. If you look at the first one, reversal in recent pattern of American dominance.
Right. So I'd say that this is like really the big call, which is that America for the last 15 years has dominated the investment and possibly the economic landscape. All I'm trying to say is that in 2025, you should expect the American stock market to possibly have the first year of underperformance in a long period compared to the rest of the world. And the reasons are, as I point out in points number 2 and 3, which is one, that this extreme dependence on the government and on fiscal spending and on running very large deficits. This cannot continue.
That's and it's your second point, in fact.
Yeah.
Fiscal deficit is America's fatal flaw. It's just huge.
It's huge.
That's what your data points are.
That's right. And I don't think the politicians are that focused on cutting back on it, and the market may put more pressure on scaling back the magnitude of the fiscal deficits that America is running just now.
And your third point is very closely related to those two. America will no longer look or will look less exceptional.
Yeah, because if you focus on cleaning out the house a bit, which is about reducing the fiscal deficit, the massive spending, I think that you will feel that the growth rates also in America will come off the boil rather than remain close to 3% like it's been for the last couple of years.
And then you say new stars are going to emerge.
Yeah, well, nature abhors a vacuum. If something goes down, something else is going to come up. And my point is that today, a lot of economies around the world are being ignored. As I said, that if the American stock market today is nearly 70% of the global stock market index,
crazy,
means a lot of things are being ignored. There are many large economies with minuscule investment weights. I'd say that more attention, more spotlight will be put on those kind of
on these new
these new stars,
which you detailed earlier.
Yeah, and there's a reason for that, which is that investment is picking up out there. The fiscal situation is more in order. So I think that that could sort of lift those economies.
And many of those, their PE ratio is much less than America.
Yes, that's right.
The other thing, which is a big change and shifting completely from the other lag effect where people are saying China's over, is that China is becoming investable again. Its economy may not be booming or may not be doing fine, but it's become so cheap that it's investable.
Yeah, there are some companies which I pointed out in terms of that, which have very good profit growth, what we call very good free cash flow growth, and that those companies could be worth looking at, the so-called diamonds in the rough. Given the size of that economy and size of that market, I'd say that some of those things could be compelling investments in the coming year.
Like you mentioned, EV, the electric vehicle.
Yeah, I mean, the comparison between BYD and Tesla is a case in point.
Fantastic. And your sixth point is that India, small will no longer be beautiful. It's been
an incredible run for the small and mid-cap stocks. In fact, in India, the smaller the company, the better it has done from a stock market perspective. And I'm saying that now the gap seems to have become so wide and those have become so much more expensive than the large cap that I expect in the coming year that gap of performance and valuation to close, to narrow at least, between the small, mid-cap and the large cap companies in India.
That's fascinating, actually. Both sides, America, large cap will become less expensive, and in India, small cap will become less expensive. It's just they'll become more like each other, the two countries, in this one way.
Yes, the gap could close.
Now, the other thing is this overhyped AI. You say overspending on AI because so much hype will hurt big tech firms. They're overdoing it.
Yeah, because I think for a long period of time, people have wondered that these people have almost become natural monopolies. They're earning such profits from what they do because they have such a great share of the market now that what can possibly dent their profitability? And I'd say that one thing could be that they're spending so much on AI and the returns on that may not be commensurate. And the valuations also may be questioned then if the profits don't grow as significantly. So that's something which I think which could undermine some of these big tech firms finally after their incredible performance run over the last few years.
I mean, that is again contrary to a lot of what other people think, but I mean, your figures show 27% annual growth in spend.
A massive acceleration.
You have to really believe
that's taken place. Microsoft just announced that they're going to spend $80 billion on new data centers.
$80 billion.
And as I said, that the CEOs are saying that we just want to spend what it takes now to grow this AI infrastructure.
The other thing, which is again part of your American exceptionalism, you say in your eighth point that global trade will grow without America. That's a new trend completely.
Yeah, it's already been happening, but I think with Trump's election, it's likely to be accelerated. We're already seeing some signs of that. We saw a deal being signed between EU and some Latin American countries. Countries like India are now signing more bilateral trade agreements. And I think it's very difficult in this environment to get broad trade agreements done. So I think that, and also a realization that trade is still important. And if America is going to turn its back on international trade, we still need to benefit from international trade. So countries are doing much more bilateral arrangements.
I mean, in the old days, you say export-led growth led to a lot of stuff. So exports are important. Trade is important.
Trade is still important.
But with America, there'll be so many restrictions, better look elsewhere.
That's right.
And that's what you said is already happening and it's going to accelerate. Then the fascinating thing about India and globally actually, private funding is going to slow down. Public funding is going to increase again. I mean, I didn't realize private funding is so much higher now than public funding is, and it was the opposite 15 years ago.
Yes, and mainly led by the US again. Because in India's case, it's still at its nascent stage. But yeah, I expect that trend to slow down in terms of this exponential growth that we've seen in private. Because remember that a lot of the private growth has also happened because it's been much easier regulatory environment. Because in the public, you're much more regulated. Private, much less regulation happens.
Globally, private funding will slow down, but India, it may or may not.
Exactly.
India is it's a nascent stage.
Exactly. That's the point I'm making. Yeah.
I should clarify that. Finally, don't have a Ozempic, don't have obesity, just run day and night and get fit like you are. That is just the worst forecast. We all thought we could just pop a pill and...
Or have an injection and it'll be cured. I'm trying to say that, there are many benefits for that, especially if you have diabetes and other things. But I think that this whole idea that there'll be no side effects or it's as simple as that, I think that could get questioned. And you're seeing increased amount of research now, which is questioning that okay, how much, that if you do this, then you have to do it for life. It's not something that you can just do and move to a lower plateau. Very difficult to sustain that.
And people should realize that.
Yeah.
Absolutely fascinating once again. We'll end there because I know you have to go for a jog. and I have to go quickly and try my injection. No, I won't try it now. After I've heard you, I won't try Ozempic. But thank you very, very much again. We'll give you a score next year. This year you were 80%. Have a look at, because these are such big forecasts. They're absolutely fascinating. Thank you very much for joining us again.
Thanks, Prannoy. Enjoyed that. Thank you.